This is Attorney Drew Page, and I just finished watching an interview on CNBC with the CEO of Robinhood. And I want to walk through the interview and see what we can learn about that and how it may or may not relate to the lawsuit that's been filed in New York. By the way, for those who have been faithfully subscribing and liking my channel, expecting Undercover Billionaire videos, I promise they are coming. But obviously this is urgent news and something that needs to be addressed pretty immediately. So the Undercover Billionaire videos are coming, so hang with me and we'll get some sales tips and business tips from the latest episode of Undercover Billionaire. Let's catch the first part of the interview.
The CEO of Robinhood, Vlad Tenev, is with us right now, and we appreciate you joining us on a day where there are so many questions. And as Melissa just said, there are, frankly, as you know, a lot of angry customers out there and a lot of questions about what took place and the decisions that you made to limit so many of your customers' ability to buy stocks like GameStop. Questions about whether you have a liquidity problem, whether you're trying to protect them from themselves, whether Citadel did this. Explain what happened today.
Thank you for having me on the show again, Andrew. So what happened today was, as you pointed out, we had to make a very difficult decision. It's been a challenging day.
So right off, whatever decision they've made was made intentionally. It was a difficult decision, but they made it, and it was an intentional decision. They intended to make whatever decision this is. So what decision did they make?
We made the decision in the morning to limit the buying of about 13 securities on our platform. So to be clear, customers could still sell those securities if they had positions in them. And they could also trade in the thousands of other securities on our platform.
Thank you for your clarity. I mean, it's not like we needed a news flash to find that we could sell at the low ends after the stops have been put in place, and that we could trade the countless other stocks that weren't being driven up initially before the stocks were put in place. We don't need that clarity. We know because we experienced it. Those people who were your customers knew that they couldn't buy at the dips that were coming because you shut them off. That was an intentional decision that you and your team made to prevent your customers from being able to purchase those WallStreetBets trades. They could sell them while they were going down, but they couldn't buy them while they were going down. You made that determination for them. That's what their beef is. They don't need clarity. They experienced it today and are now left holding the bag. Let's see what else he has to say.
So it was a difficult decision, and that's what we had to do as part of normal operations.
So is it part of normal operations to leave your customers holding the bag and not letting them be able to buy when things are at a dip so that they can then make some money if it comes back up? I mean, come on. What normal operations allow this to happen? I think they're going to try to weasel some answer in there. Let's see what he has to say.
But explain then, why did you do this? Did the SEC call you and tell you you had to do this? Was there a problem inside the company in terms of liquidity, in terms of the amount of deposits that you had to put it in front to the exchanges? What led to this?
Sure, and let me explain exactly how this works. First of all, I want to address some of the misinformation that's been out there because there's a lot of it. We absolutely did not do this at the direction of any market maker or hedge fund or anyone we route to or other market participants. The reason we did it was because Robinhood is a brokerage firm. We have lots of financial requirements, including SEC net capital requirements and clearinghouse deposits. So that's money that we have to deposit at various clearinghouses. So some of these requirements fluctuate quite a bit based on volatility in the markets, and they can be substantial in the current environment where there's a lot of volatility and a lot of concentrated activity in these names that have been going viral on social media. So we're really in unprecedented times, and in order to protect the firm and protect our customers, we had to limit buying in these stocks. And to be absolutely clear,
Okay, so the explanation is that there are clearinghouses that require certain net capital requirements. And in order for Robinhood to satisfy that, they had to put a stop on the ability of its customers to be able to purchase. But you heard at the end of that statement what he said. He said, in order to protect the firm and our customers. So this was a firm protective decision. This was not a decision made in the best interest of the customers. This was a decision made for the best interest of Robinhood and their investors and their officers and the people who are working there. You're left holding the bag, retail investors, because they needed to protect themselves. And if there were these requirements, why didn't they come out and say that this morning? And knowing the volatility that had been in the air the last couple of days, why wouldn't you warn investors of that pre-trade rather than waiting until the stocks are flying up and then dump it on all of your retail investors? How does that help anybody?
Go ahead.
But it sounds to me, though, that you're suggesting that there was a liquidity problem inside the firm. And my question about that then raises all sorts of new questions about whether there's a systemic issue underneath the system and underneath the company unto itself.
Bingo. It sounds like Andrew Ross Sorkin from CNBC is finally back on the little guy's team. He sounded a little rough this morning. It was kind of strange. Normally he's pretty anti-establishment, so it was kind of weird to hear him this morning. But that's a question that everybody wants to know. Is there an underlying problem with Robinhood? Or is there an underlying problem with the market that wasn't disclosed? What do you have to say for that, Vlad?
No, there was no liquidity problem. And to be clear, this was done preemptively. So we did this proactively, and thousands of other securities remain tradable on the platform. Customers that held these positions were able to sell them. And we're doing what we can to allow buying and to remove these restrictions in the morning. But also.
Okay. Hold on. So they did it preemptively. So in other words, they didn't necessarily have to do it at that point. It was a preemptive decision. It was a proactive decision. But that doesn't necessarily mean it was a requirement for them to do it. They said they acted preemptively. And it's weird that he keeps saying, oh, there's all these other stocks on the platform. He knows just as well as everybody that the stocks that people wanted to buy were the WallStreetBets stocks. Why does he keep bringing up all these other stocks? Nobody wanted those stocks today. Nobody cared about those stocks. Why are you bringing that up? What we want to know about is why you stopped the trades on the WallStreetBets stops. I mean, explain that. We don't care about all the other stocks. We'll care about those at some point in the future. We cared about these stocks today that you preemptively shut down. You decided to do that proactively. That's your words, not mine.
Also, you might have seen Robinhood has been the #1 app in the App Store.
I could be wrong, but that's likely to change, I think. As I recall seeing someone on Twitter saying that there were 100,000 one-star reviews that were removed by Google for the Robinhood app. So I suspect that will probably be a different number and different ranking come first thing in the morning, but we'll see.
Overall, so we have seen unprecedented interest due to the fact that finance has been culturally relevant in a way that hasn't been before, and these stocks are going viral on social media. And I think it's really interesting to juxtapose against some of the other questions that we've been having before this. Of course, Robinhood stands for everyday investors. From the very beginning, we have stood for investors, opening up access and giving them the ability to trade commission-free in whatever. So it pains us to have had to impose these restrictions, and we're going to do what we can to enable trading in these stocks.
Well, it pains your customers too, as you can tell by all the reaction that you're getting on social media now. It's great that you've offered commission-free trades and all of that, but it doesn't matter if it's commission-free if you're allowing your customers to lose thousands of dollars and they're holding the bag while everybody else is getting to take care of their short positions so they can be protected by the Friday deadline for the GameStop shorts. So how exactly is that supposed to bring some solace? And you keep mentioning that you're going to open it up in the morning. If you could open it up tomorrow morning and keep things going tomorrow morning, what was the problem this morning that you needed to preemptively move? I don't know. It seems like a pretty rough case to me. I'd make sure that my lawyer team was nice and stacked for this Southern District of New York case if I were you.
As soon as we can.
But what do you tell the Robinhood investor who says, look at the screen, I'm losing money, you are not allowing me to buy this, and by the way, I'm going to have to sell it for less money because of what you did?
By the way, that's the entire claim of the lawsuit in that one question.
Well, to be clear, we're not allowing people to buy it, but they can sell positions that they have.
I mean, how many times is he going to say that? He said that like 3 times already. I mean, we get it. We could sell it on the way down. So we could take losses. We just couldn't buy the dip. I mean, do you understand that? We get that we could sell at losses. We get it. We got that. And it's great to know that. So thank you for clarifying it for at least the 3rd time.
And, I feel a little bit... I know how Clorox and Lysol felt in the pandemic when they were running out of hand sanitizer and supplies.
That might be the dumbest comparison I think I've ever heard. Whoever gave him advice to make that comparison should immediately be fired. What does Clorox and Lysol have to do with you putting a stop on your investors' ability to purchase stock? Has nothing to do with it. The stocks are available for trade. You can trade them. There's nothing stopping you. It's not like a place on a shelf where there's paper towels and Clorox wipes and toilet paper, and there's nothing on the shelf. These stocks are available. You kept us from grabbing them, is what happened. You stopped the free market trade for your investors. Please don't compare stuff to the pandemic. Nobody feels sorry for you. Nobody's going to feel sorry for you. There is no comparison between your decision to preemptively and proactively deny your investors the ability to purchase stocks that they desired and empty shelves at a Walmart.
We just haven't seen this level of concentrated interest market-wide in a small number of names before. So we understand our customers are upset. We're doing what we can to re-enable buying in these names, and we stand with our customers. We stand for the everyday investor, and we do believe that you should be able to buy and sell the stocks that you want to, subject to all requirements. And that's what we're gonna.
Maybe it's just me, but I've yet to hear what any of these requirements are. Has anybody heard that? If you have, put it in the comments. By the way, now would be a great time to subscribe and to hit the like button so that we can get the algorithm going and we can get this information out so that we can protect other investors in the future. Again, I'm not a financial advisor, and I don't suggest anybody invest the way that I do. Everybody has different risk tolerances. I happen to have a pretty aggressive one, but you do you. But at the end of the day, this video isn't about winning and losing and investing. This is about the right way to treat your customers.
We're working day in and day out to make possible.
What do you say to the customer who says, look, maybe I shouldn't be on Robinhood anymore? If they're going to shut me out right when I need to be on the service, maybe I should go to an alternative service.
Look, we realize customers are upset with this. It was not an easy decision. Ultimately, the team made the correct decision here. So what we can do is move forward, focus on giving customers the most stable and reliable platform going forward. And we've invested a lot in that, and we've actually seen some great progress and taking all the steps we can to make sure customers can buy the securities that they want to buy without restrictions in the future.
Just so you know, the dog barking was not part of the video. This is my recording, and unfortunately the neighbor's dog is having a fit over something. Who knows? Hopefully I don't have somebody breaking into my house right now.
When you look at the trading in these stocks over the past several days, do you think they're divorced from reality? Are you concerned that the investors that are involved in this are doing these things for reasons that they fully understand and they fully understand the risks involved?
Look, when I'm obviously a big believer in more education. I want to make sure that we give customers all the tools and educational resources that we could possibly give them. This is really about access, and access is something I've been super strong about from the very beginning, in the face of a lot of criticism and questions about whether we should be granting people access in the first place.
Now, I'd like to have some explanation about what that means. That he's gotten beat up essentially over giving access to regular investors. Isn't that something that's been going on for a while? I mean, you have TD Ameritrade, you have the Schwab accounts, you have E-Trade. So it's not like Robinhood is anything special or new, except they have commission-free trades. And apparently they preemptively shut down your ability to purchase stocks when there's momentum. But what does that mean exactly? That he's faced criticism over allowing regular investors to take part as a part of their business. I don't get that. Someone needs to ask him what that means and get a legitimate answer. We have still yet to hear what these requirements are. So maybe, perhaps someone will stay on him, or maybe regulators, I guess. I'm not a big fan of regulators myself. But if that's what it takes to get a straight answer out of this guy about why he preemptively prevented his customers from being able to participate in a momentum market, then that's what we got to do. But still haven't heard that answer. I guess we'll keep watching. Maybe we'll get lucky.
So yes, I think people need to be informed. They need to be educated. We do want to give them the ability to do that. But I also believe that access is a very powerful thing. The more individual investors have access to the markets, the better off we will be. And we're going to work tirelessly day in and day out to make sure customers have that access. It's in the name. It's everything we stand for.
Vlad, can you walk us?
Let me bring Melissa in.
Yeah, Andrew, thank you. And Vlad, thanks for being on CNBC. Can you walk us through the moment in which you realized that you needed to do this in order to have the capital? I mean, you drew on credit lines. We've confirmed that, and you can confirm that to us directly. At what point did you say, the options volume is just crazy, the stock volume is crazy, and we need to do this? It sounds like something you should have been able to figure out prior to today.
Wow, is there an echo in here? I almost feel like I said that a few minutes ago. If you're able to get these things done for tomorrow, why wouldn't you be able to have done it today? It makes zero sense. So let's see what his answer is to that.
Well, it's interesting because I don't remember a time in the past where social media and the financial system have intersected in such a direct way. So things can go viral on social media, and that can lead to virality in the financial markets. Like I mentioned before, Robinhood's been #1 on the App Store for the last several days, and we've never been #1 on the App Store before. So I don't think anyone could have anticipated that this would happen.
Excuse me, though. That does not answer the question. And what does the virility of the social media have to do with anything that you just said? The social media has had a viral impact for the last 3 days on the stock. So why today? Why the day before the supposed shorts are supposed to be taken care of on Friday? Why the day before is that when the customers are denied access to be able to purchase their stocks? Not sell it. We got it. They were able to sell it. Why were they denied access to purchase today? It makes no sense. That answer about the virality of social media makes zero sense. Has nothing to do with anything. That's just smoke and mirrors, because he has no answer for that. He still hasn't given us an answer for that. And hopefully this lawsuit that's been filed in the Southern District of New York will help get some answers to that.
And in terms of the credit lines, you mentioned that was really a proactive measure. As I mentioned earlier in the conversation, the deposit requirements that we have at the various clearinghouses govern how much we can allow customers to buy some of these stocks. So obviously, in line with our mission and what we want to do, we want to put ourselves in a position to allow our customers to be as unrestricted as possible in accordance with the requirements and the regulations. So we pulled those credit lines so that we could maximize within reason the funds we have to deposit at the clearinghouses.
So now we're sort of getting an answer. So he's pushing the blame on the clearinghouses. He's kicking the can down their road and saying it's the clearinghouses and their requirements. And so now he's opened these credit lines and all of these things. So it'll be interesting to see who's going to hold the clearinghouses accountable. Anybody? Is the SEC listening? Are they going to hold the clearinghouses accountable? And why didn't we have the credit limits already available? If you knew that they were there, you should already foresee these types of things. Market momentum runs happen all the time on all different kinds of stock. So why are you not ready for that? That makes zero sense. Don't blame it on somebody else. Just admit that you screwed up and that it hurt your client base, and you need to fix the problem. You need to fix it. These people were sold out where they couldn't purchase stock in a dip, while those who are holding shorts are able to do what they need to do to protect their interests. Your clients were suffering and closed GameStop at a 199, which, by the way, interestingly enough, in extended hours trading is now over 300.
Final question, and we only really have 30 seconds at this point, and we will continue this conversation on Squawk Box tomorrow. But the question I would ask you is, you said you're going to start allowing buying tomorrow. What happens if it triggers whatever system triggered today where you had to stop it? Are you anticipating that? Are you doing anything ahead of that prospect?
Yeah, we're doing a lot of things. You know, we want to obviously allow buying safely for the firm and for the customers.
So what is this about safe investing? What is Robinhood their client's parent now? Are they supposed to tell them, no, you're not supposed to invest in this, little boy, little girl. You're not supposed to be involved in this, so you might need to really think again before you purchase some of this stock now. So I'm going to stop you from being able to do that. You're going to be in stock timeout. I mean, come on. A stock is worth what a willing buyer and a willing seller agree that it is. If it goes down, it goes down. If it goes up, it goes up. But this morning, when you preemptively and proactively stopped people from being able to buy, not sell, got it, you let us sell. When you proactively and preemptively prevented your customers from being able to purchase WallStreetBets trades, they were on the way up. And when it shut down, they fell like a rock. So they don't need a parent. They just need you to get out of the way.
And the teams have been working very, very hard. They were already working very hard dealing with the unprecedented, volumes and the equity volumes and the unique situation we've been in. So we want to do that safely. We want to be clear in the communications. And I own that, we should have been out there a little bit sooner. The team's been working very hard. People are doing what they can for our customers, and I'm very proud of the work that the team is doing and has done.
So that's pretty much the whole interview. What do you think about that? What do you think of his explanations? What do you plan on doing tomorrow when the market opens? Are you planning on leaving Robinhood to find another online trading platform? Again, please subscribe to this channel and like this video, and put in the comments what your answer to those questions are. Again, I'm attorney Drew Page with the law firm Randall Page. You can reach me at my Suffolk, Virginia office at 757-935-9065. My website is www.randallpagelaw.com, and my email is drewpage@randallpagelaw.com. Stay tuned.